Great stuff. Well, welcome to You Understood's episode 24. I'm delighted to welcome Marlene Shiels into the revamped studio. You're the first person into the revamped studio, Marlene. So welcome. And what I always like to do is ask the guests to kind of give a bit of an intro and a background on themselves.
Okay, thank you. And what a beautiful studio we're in today. It's very nice. So as you say, my name is Marlene Shiels and I am the Chief Executive of Capital Credit Union. And we're based through in Edinburgh and we are a community bank. And I've been with the credit union for 35 years now. Was there on day one of the very first members. Firstly as a volunteer, but from 1998, I've been employed by the credit union.
That's incredible. So first of all, then, let's just explore that 35 years, because I think it's fair to say now that's almost unheard of. So clearly you started as a volunteer. Talk us through the kind of journey and the experience, what inspires you, what motivates you to kind of have a tenure that long.
Yeah, so, I'd love to say that right at the beginning there was some brilliant story, but there wasn't. It was right place, right time. I was working for Lothian Regional Council and the council had decided that they wanted to set up this thing called a credit union that some of the councillors had heard about, which was to provide an employee benefit for low-paid employees who couldn't go to the bank and get savings and loans accounts. So the council, as I say, it was back in 1987, actually, they decided to set it up, and it took 2 years to get it off the ground.
Okay.
And I worked for the council at the time in the HR department that was setting the credit union up. And because I was the most junior member of staff, I just got all the admin tasks to get this thing off the ground that nobody was quite sure what it was, because none of us had ever heard of a credit union. So anyway, took 2 years. We got the credit union registered, set up. We opened it to all of the council employees. And within a week, 600 people, 600 employees had signed up to this new savings account that the council was offering. So I just, as I say, right place, right time. I became a member. I helped out with the administration. I ended up being a volunteer ambassador because now we had to have employees to go and promote the credit union because it was still an unknown quantity. So I became a credit union ambassador, and then fast forward about a year later, I got asked to come onto the board of directors. And at 26, I knew nothing. And I thought, I'm going to get found out that they know I know nothing.
And that's a big responsibility for 26,
so 26,
right? Yeah.
I'm on the board of this little organisation.
You're a high flyer, Marlene.
Yeah, well, maybe not. Right place, right time. Good mentors as well.
Got it.
But very quickly, I realised that this is an organisation that is different. This is an organisation that actually really does help people. Because as a not-for-profit, as credit unions are, we're not driven by trying to make money off the back of people. We're driven by actually supporting people to be financially well and to have good financial resilience. And as I say, back in the day, back in 1989, the council had 23,000 employees, 3,000 of which were below the threshold for low pay in Scotland.
Okay.
This is council employees.
Wow.
So, kudos to the council for setting it up.
Yep.
To try and help those individuals that were employed that actually, as I say, they couldn't walk up to a bank. They couldn't get a bank account. They couldn't get a credit card. They couldn't open even a savings account because they weren't credit worthy enough.
I want to touch on some of the demographics later on, but you started to talk about, and I can understand that 35-year tenure to an extent, having been a part of that creation and that new thing. You kind of want to see that journey through, right? It's a part of you. It's a part of your DNA. So I get it now. I understand it. So I had to do a little bit of research on credit unions just to kind of remind myself. But I think it'd be really good for the listeners, the viewers, just to talk about those differences between what everyone knows as the typical banking system and all of the issues that go with that. And I think we can touch maybe on some of that. But fundamentally the key differences between a credit union and a bank in terms of consumer choice.
Yeah. So I think the first thing to say about credit unions is they are not for profit, and banks are there for shareholder value, and that's in its most simplistic. And I think most people understand the difference between shareholder value and an organization that is not for profit. It is there for the people it serves. But it goes much more deeper than that. Mm-hmm. So credit unions, we're community organizations. We're here for the members who own us. And every member who's a member of my credit union is a part owner. So that's very different, of course, to a bank. But then when you start to drill into the DNA of a credit union, we work to 9 cooperative principles, credit union principles. Okay. And those principles are about service to members. They're about education. They're about building financial resilience. They're about putting the member at the heart of everything that we do. Every decision that is made with the member at the heart. You don't find that in a bank. That's not what a bank is there to do.
As you're speaking, I'm thinking that's a very different language to what we're normally used to hearing, right?
Especially in financial services. Yes. And of course, democracy is so important to credit unions. It's one member, one vote. Yep. So it doesn't matter if you have £1 in the credit union or you have £85,000 in the credit union. It's one member, one vote. And every member is eligible to stand for the board of directors, who are volunteers, who are there to run the credit union and give leadership for the benefit of the members. So some very fundamental differences between the two types of organization.
Got it. And the credit unions are kind of community. How is that defined? Is that defined by kind of geography and geographical boundaries? And how is that agreed in terms of principle between all of the credit unions?
So what we have in the United Kingdom is what's called a common bond, and that's the language used by the regulators. And there are several different types of common bonds that a credit union can choose to operate under. So my credit union has a geographic common bond. Okay. So our geography is the east coast of Scotland. So if you live or work in the east coast of Scotland, you can join my credit union. There are 34 credit unions in Scotland that have the G postcode. So if you live in the G postcode from Ayrshire up to Oban and everywhere in between, then that's your common bond, and that's geography as well. But you can also have a different type of common bond, which is an employer common bond. Okay. So it's linked to a specific profession, such as the police. For example, we have Scottish Police Credit Union. Okay. So if you're a member of the police, or your family has a police officer, a serving police officer, you can become a member of that credit union. And they're the two most traditional, which is geography or linked to employers.
Got it. Okay. In terms of general awareness, then, obviously the cash benefits driven by the credit union are ploughed back into community, and it's for the community. Does that change the relationship that you would have with your clients and with your customer base? Do you feel like there's a fundamental difference between, again, I'm kind of looking back at history and I'm thinking about what Joe Bloggs on the streets would say around walking into a bank and having an account manager or somebody that understood their background and their history, and the relationship was a stronger bond? That's definitely gone from the high streets now and from banking. Have you retained that? Do you pride yourself on that?
Yeah, and I'm going to answer that in two ways, if I may, Paul. Mm-hmm. So you're absolutely right. If I think about Capital Credit Union and our peer credit unions through here in the West, every member is a person, and we may not know every single member personally, okay, but they are a person. They're not a number. And every member that comes into contact with the credit union, they can talk to someone. And I can tell you, my team at the credit union, and I know this is the same for most credit unions, when we know our members, we know what their challenges are, we know what their issues are, and they know they can lift the phone, they can walk into the office, they can get on the app, they can get on the chat, and there's a person at the other end who's listening. Now, don't get me wrong, we have automation, we have automatic lending decision-making tools, everything that you would expect in a high street bank, yep, but there's always a person at the end of a phone or at the end of a chat. And I think that's the major difference, that It is, as you liken it, it's almost like going back to the olden days when every branch had their own manager and that manager had autonomy to deal with the customers. It's exactly like that in a credit union. It's been like that since day one. It's like that 35 years later. Our people are people. They're not numbers. And we behave in that way towards our members, and they know that they can always speak to someone. But just if I could quickly, something else that you just said there about that, how people view organizations.
Yes.
I can tell you, because credit unions are still relatively unknown, but I can tell you when I go to a new employer and ask them to give payroll deductions to their employees, and they say, oh, is it just for the lower grades? And it's like, excuse me, absolutely not. You, as the chief executive, need to join this because you need to show that actually you believe in your staff, you believe in your people. And if you don't join the credit union,
what does it say? Right?
What does it say that this is something that oh, it's okay for you, but it's not for me? And I can tell you, it resonates so well when you go to someone who is in a good job, who has a good salary, and say, by you supporting the credit union, it enables us to support more people because we're leveraging your savings to help other people. And that's very powerful when you say to someone, look, just by saving, you don't have to borrow, although we've got brilliant products and they're really competitive. But even if you're just saving a little, you're enabling us to help other people. And we can leverage every pound that you save to support somebody with fewer financial choices. And that's a powerful thing for people as well.
It's an ethical choice.
Absolutely.
Really.
Yeah.
And when I started kind of doing the baseline research, I've got to say my intuitive emotion was one of being drawn into why wouldn't I? But then that had me self-reflecting. And I wondered whether there was a general kind of lack of awareness on the whys of being part of a credit union versus just being one of many and a number, as you eloquently say, of the traditional banking system that, let's face it, hasn't got a lot of positive attributes. But is there an awareness challenge out there? And what's the general trajectory of engagement from credit unions and communities? Is it generally increasing, or is it kind of flat or declining as the years progress?
So it is. Credit unions are growing, and memberships are growing, and that's fantastic news. We've had some significant growth, especially over the last 3 or 4 years in credit unions. Actually, the last time we saw such a big spike in credit union membership growth was 2008 during the credit crisis, when a lot of people were migrating from banks because they didn't trust them, and we had a big spike in the UK credit union movement membership then. But we've started to see it again, and especially off the back of a cost of living crisis, where people are becoming less attractive to banks because they're less financially viable. So we're seeing more and more people coming to credit unions to get support, to be able to open a savings account, to get access to low cost borrowing. So that's great news for credit unions. It's great news for members who are getting access to savings accounts where they can save from as little as £1 a week. I can tell you there's no bank on our high street today that would let you open a savings account and save £1 a week.
Absolutely.
There just isn't. And it's the same on the other side with borrowing. Most banks now on our high street will not lend you less than £1,000. That's their minimum. Or they'll maybe offer you a credit card. From credit unions, you can borrow from £50 upwards. And
isn't this, we'll touch on the mental health implications later on, but I'm thinking about the mindset of someone who, and I'm going to use a strange analogy here, Marlene, but, are you a runner if you can run, 100 yards, or are you a runner if you can do an ultra marathon, right? And the answer is both.
Yes.
Right. And so what it does to your mindset, if you can save £1, it completely changes it. So whilst it's a very small number in the grand scheme of things, the ability to be doing something and feeling empowered to do it actually changes the dynamic significantly for the individual and potentially part of the community, because there's not that exclusion.
Yeah.
So it's a big thing. So along with, is it a domestic trend that you see as part of the kind of transition away from high street, or actually is this going on a macro level, on a global level?
It's going on a global level, actually. I've just spent 2 weeks in Kenya. I just came back last week.
Fantastic.
And I was at a congress for credit unions, 1,800 people from 42 different countries in Lake Naivasha, Kenya. And we're seeing that, we were together, 1,800 people together for a week, learning from each other, sharing the learning. And generally, credit unions are on the up. So 82,000 credit unions globally. And I think the current number is about 350 million members globally. But every continent with credit unions are starting to see growth, real growth.
Okay.
But here's what's really interesting as well. Not so much in the United Kingdom yet. We're not there yet. But what we're seeing, particularly in African countries, that governments are getting behind credit unions because they're starting to see how credit unions are building not only financial resilience with individuals, but whole communities and serving whole communities. And I can tell you, I've been doing a lot of studying of the Kenyan government and the Kenyan regulator who've changed all the rules to enable credit unions to grow. And the credit unions in Kenya are growing exponentially compared to any other country in the world.
And the government have facilitated that.
Because the government and the regulator are getting behind the credit union movement and saying, we see the benefit you're bringing to communities, so we're going to give you rules and regulations that allow you to grow.
Yep.
And that's one of the problems that we have here in the United Kingdom. We have very restrictive rules and regulations around credit unions.
Okay.
The example being the common bond I mentioned.
Yep.
They keep this marketplace small. So that's what keeps credit unions small to an extent, because we have these restrictions.
And is there hope for legislative change?
There is. Certainly the Labour government, the new government they have written into their manifesto, they want to see the mutual sector grow.
Okay.
And they want to see it grow significantly. So that gives us a lot of hope that actually we will get some airtime with government.
Yep.
And we're able to say, we can grow more and we can support more people to build financial resilience if you lift some of these restrictions. And we're very hopeful 2025 will be our year for government to be listening and help us grow.
Well, that's encouraging. That's a bit of optimism is good, isn't it? So in terms of kind of typical customer or demographics, what would your response be to that? Versus, again, going back to the high street versus credit unions, do you see a definitive split between demographics here and demographics over there?
See, that's a really interesting question. And if I describe the credit union movement in the United Kingdom, generally, most credit unions will serve whole communities.
Okay.
But we do have some credit unions that are very much serving people with fewer financial choices.
Okay.
And that's their DNA. And then on the other side to that, we would have credit unions that are employee-based, as I mentioned earlier, police credit unions, teachers' credit unions, and they have a very distinct demographic. But then you have the ones in the middle. And I think, if I'm really honest, and I want to be controversial, it's the ones in the middle that will shine through at the end of the day. And those are the credit unions, like my credit union, that serve whole communities. So it doesn't matter if you're living on benefits or you're the chief executive of one of our biggest employers, say the City of Edinburgh Council or ScotMid or whoever. We need credit unions to be able to serve whole communities so that, as I mentioned earlier, the people with means, the people with savings, I can then use those savings, I can leverage those savings to provide loans for people with fewer financial choices in a good environment and provide accessible, low-cost borrowing for them as well.
There's lots of things here that resonate in terms of community wealth building. Right, and that I know that's a key part of strategies in local authorities and national government. So it feels good. It feels like a good thing. Just on the credit unions themselves, is there or are there shared resources that you can all benefit from, or do you actually operate independently based on the community or the employer?
That's another great question. Credit unions do work very well together.
Okay.
Collaboration amongst cooperatives is one of our 9 principles. So we do work very, very well together. We share, I'm a member of the National Credit Union Forum, which is 8 credit unions that come together 4 times a year to learn and share from each other. And that's about policies and ideas and thoughts. But actually where the credit union movement going in the United Kingdom is going right now, which is going to be a game changer, because we've done a lot of research on this, is my credit union, Capital Credit Union, together with Glasgow Credit Union and Scott West Credit Union here in Scotland. The 3 of us have come together and we've set up a new organisation, and it's called CU Share. And it's what is commonly known as a CUSO, a Credit Union Shared Service Organisation.
Okay.
So you've now got the 3 largest credit unions in Scotland have set up an organisation. And what we're going to do is deliver products and services centrally.
Wow.
For not only the 3 credit unions, but ultimately for any credit union that wants to buy into those services. Because what we find is we're too big to be small and we're too small to be big.
Right, okay.
So we don't have that big buying power.
Yep.
But collectively we do. Because between 3 credit unions, you've got over 120,000 members now, as opposed to my 31,000.
Right.
So this is quite new for the United Kingdom credit union system, not for other countries. They're really big in Australia.
Okay.
CUSOs are really big in the USA, but it's a new phenomena here.
You'll be able to collectively leverage that for the community, right?
Yeah. So this is the next big thing for Scottish credit unions, and then hopefully we'll roll that out across the whole of the United Kingdom as well.
Goodness me,
it's very exciting.
It's all exciting, isn't it? It's all exciting, and it's lovely to see that smile on your face. Again, coming back to the 35 years, it's amazing that it continues. As long as something keeps interesting, it evolves, it keeps you engaged, right? So change not for change's sake, but change for the interests of the people that you serve is critical, right? Can we touch on, before we move on to the mental health aspects of financial discipline or ill discipline or circumstances, in fact, can we just touch on the charity or charitable aspects of what you do?
Yeah, so credit unions are community organisations, as we've already said, and all credit unions, service to community is part of our DNA. It's part of our principles. So many credit unions do that in very many different ways. But I can tell you what we do at Capital.
Great.
So we have Capital in the community, and that's our charitable arm to the financial services part of the organisation, if you like. And we, as well as we have a fund of money that we set aside every year, and any member can apply to the fund to have a donation made to a local community group. So that's the member driven. So if you're a member, you can write in and say, I want money to go to this particular charity in my community, and it'll either be £250 or £500, which is a lot of money for some very small local community organisations. But also sometimes we like to think big. A Capital Credit Union, and we've done that this year in spades. I am very fortunate to be on the board of the African Cooperative Development Foundation, ACDF, which is a brand new foundation, which is going to be Pan-African. And we have 4 pillars, which are climate, inclusivity, health, and education. And we're just starting to think about projects under those 4 pillars. But we had our first planning day in Kenya in January this year. And just talking, so we have 9 board members, of which 3 are what would be described as off-continent. So I'm off-continent and I've got 2 American colleagues, but the rest of the board are all Africans. And when we were talking at our planning day, they were talking about what the challenges are in Africa. And one of my colleagues happened to talk about, in his community, period poverty is huge. Yep. So we just started to talk about that. And for me, it was almost like someone had kicked me in the stomach, in so much that he talked about a specific school and 60% of girls missing education, missing a class, missing a week, or just dropping out entirely because of period poverty. And it was like somebody kicked me in the stomach, and I thought, I can help that school. I can help that school.
Nice.
So I started, the hamster wheel starts turning. I get back to the credit union.
Dangerous.
Yeah, get back to the credit union. I start to talk to my staff and my board, and they were like, no, we're not doing one school. We're going to do more than one school.
Oh, fantastic.
It's like, okay. So it's, how do we do this? So we knew that the period pads that we had to send out to Africa had to be really good quality.
Yep.
So we engaged a local company in Edinburgh, and this woman, Kerry, as well as making and selling them, she taught us how to sew the pads.
Oh, wow.
So we started out making them ourselves, but realized we couldn't make enough quickly enough. Yeah. So we started fundraising, we were making pads, we were buying pads, and we committed to support 3 schools. That was our commitment. We were going to support 3 schools. And we started the Project Blossom, and it just went global. We started talking to other credit unions in the USA and in Africa. And when I was in Kenya 2 weeks ago, we went to 3 different schools and provided the sanitary pads to 449 girls in 3 schools.
That's amazing.
But we've now raised nearly $100,000.
Just off the back of the initiative.
Just off the back. This is our project, and we've now raised nearly $100,000.
That's phenomenal.
And the plan now is that we will help 6,000 girls with what we have right now.
Yep.
But the plan is that we are going to find women's groups in Africa, entrepreneurs who want to actually set up businesses to deliver locally.
So you're empowering them to do
So we're
that.
empowering them to make the pads and sell them as at a not-for-profit, enough to make a living, but at a not-for-profit, so that we can keep this project going. So that's phase 2 now, is to find women's groups on the continent that actually will deliver. And we've got enough money to get that off the ground as well.
Do you want to give a shout out to Kerry in Edinburgh and the company?
So Kerry in Edinburgh at TCS is the company that has been supporting us through, and she's going to do a webinar as well when we get the entrepreneurs.
Okay,
she's going to start to teach the women in Africa, and she's from Uganda, which is even better.
Even better. So the connections are strong.
What goes around comes around. But we thought we were just going to help 3 schools, and now this is going global. Absolutely.
Doesn't that feel good?
It feels amazing. I mean, we're all on a high every day. We're on a high when more money comes in, and it was like, right, we can do more.
But it shows you what can happen when people come together for a collective cause that's, going to have a hugely positive impact, doesn't it? It shows what's possible.
Yeah, absolutely.
And I think, you look at kind of media generally, and it's all really quite negative at the moment. So we need more good news stories like that for sure. Yeah. So touching upon the impact of finances on people, and particularly on their mental health, I don't know whether I'm a bit strange, but I've always found, well, definitely strange, but I've always found money and cash generally to be quite a divisive subject, and that remains in part today. But I think I wonder what your view on how society's relationship with money has changed over the decades. So if I go back to kind of early 80s, there was still a resonance of saving to achieve things and to treat yourself to the finer things in life, and that gradually, actually, and quite quickly, got eroded to the society we're all in today, where if we want something, we get it now and we put it on credit immediately, and we don't really think about the implications. And sometimes that's okay, but often there's a lack of long-term affordability for that individual, and the individual either doesn't want to consciously think about that because they want the dopamine hit of the thing, or they haven't been educated to think about that. So, and by education, I don't mean stereotypical education. I mean kind of societal, parental education or peer education. But what's your view on that generally? Is that just a lack of individual discipline, or has government got some role to play in that that's important in terms of education? Or, generally, what's the view? Because this capital growth curve, it can't go on forever. And yet we want it, we want it to continue to grow, because that's capitalism, right? So it has to keep on growing. But I see these consequences of that mindset playing out everywhere, particularly in high growth consumerism generally, that is damaging planet, it's damaging lives, and it's damaging all sorts of things.
I mean, it's a really good points that you've made there, Paul, really good, but it's complex. It's really, really complex, our relationship with money. And, if I think about even just my membership, and, we've got, of our 31,000 members, about 10,000 of our members would live on benefits, so they don't have any employment income.
Okay.
All the way through, as I mentioned, we have chief executives of big, large employers and people in between. And it is complex in so much that, for me, when I think about the relationship with money, there's the people who have money, the people who are struggling a little bit, and the people who genuinely don't have enough to live on. But then you have to add, it's almost like these things that you add on top, and technology has played an amazing part in and I don't mean that in a necessarily good way, but a significant part. Technology has played such a significant part in our relationship with money over the last 10 years, that it's changed beyond all recognition, as you've mentioned.
Very quickly.
When I was growing up, you didn't get something till you saved up for it.
Absolutely.
And if you didn't save enough, you didn't get it. It was as simple as that. But now we have all this tech that brings money to your door. And, particularly one of the big issues at the moment is buy now, pay later. And that's been around for a few years now, and that's tech driven, whereby you go to the checkout, either physically or online. You go to a checkout and you get this offer to pay over a number of months, 3 payments, 4 payments, whatever. Buy now, pay later. And that's changed the whole psyche, especially with young people in what their relationship with money is. And that instant gratification now, and when you bring the two together, it can be quite explosive. In so much that now what we're seeing is that more and more people are getting into unmanageable debt because money is so easy to come by, but not so easy to pay back. So the whole relationship with money is changing. And this phenomena, buy now, pay later, it's a bit like, we had PPI in the past, and it just exploded. And then we had PCP, which is how to buy your car through a contract plan. It exploded. And these are all tech-driven solutions.
And lowering the barrier for the consumer, right?
Every time lowering the barrier, that's a really good way to describe it, to the point now that we do have more people indebted now than we've had previously. And it's becoming unmanageable debt because it's so easy to get hold of credit. And of course, the difficulty with buy now, pay later is it's not regulated at this moment in time. So it's a bit of a free-for-all. And anyone can come into the marketplace and make that offering. Now, it's risky for the lenders, but the volumes that they're getting, it's billions and tens of billions of pounds every year that is goods are bought on buy now, pay later. But now we're starting to see the consumer detriment. And now the Financial Conduct Authority is stepping in. They've just put out a consultation paper yesterday saying that these are the rules that we're intending to put in place to regulate buy now, pay later.
Almost like a notice, really, right?
Absolutely, because they're seeing the consumer detriment is so significant and people are just getting in right over their heads.
And the challenge is, and I had my own personal experience of this when I was a lot younger, but once you're in that cycle, it's incredibly hard to get out of it. So I remember going back, juggling multiple credit cards, 30 odd years ago, juggling multiple credit cards on top of mortgages and loans for the car. And I looked at it one day, and this is going back, a long time. I was paying several £100s of interest every month without touching the capital that I owed, right? So my point is, once you start to slip into that cycle, your decision-making criteria is affected, and you're more likely to slip into a deeper cycle. And I think there's a real challenge out there around help for those individuals because, and it was wonderful, by the way, for you to talk about kind of lowering the barrier on minimal amounts, because often the answer is, unfortunately, loan sharks to people in those situations, which is a whole different ball game. But I think people in society, there's a mix of governance and regulation that's needed. There's a mix of personal responsibility and education that's needed, but it's definitely causing anxiety and stress. And I know then that has a knock-on impact in terms of productivity and in the workplace. So then, does that impact your ability to hold down a job and to continue to bring in an income stream that's actually fundamentally important to you and the family? So there's all sorts of links here. Do you see snapshots of that on a kind of increasing basis, like to the point where we're verging on crisis in circumstances, without going into details? But do you see that more often? And if you do, how does it manifest itself in your own experiences and your team's experience?
Yeah. So, again, everything you've just said is absolutely correct, and our relationship with money does affect us in so many ways, and where we are in that relationship. If we're doing okay and we've got a good job and we're able to meet all our commitments, then people tend to be happier. But the minute you start into that slippery slope where debt becomes unmanageable, you have two things here. You have people who are now getting into this unmanageable debt, but remembering 21 million people in the United Kingdom have less than £100 of savings to fall back on. So now there's no financial resilience over here, but the debt's increasing over here.
That's a staggering. I hadn't realised that. That's a staggering
21 number. Million people in the UK have less than £100 in savings. So as I say, no financial resilience whatsoever. And now, building up these debts, we know people are in negative budgets, principally people who are living in benefits, but even people in employment are starting to get squeezed. We've just, some might say, come out of a cost of living crisis. Some say we're still in a cost of living crisis. We're kind of on the cusp.
Yep.
Regardless, people have come out of a period of time where their finances have been so stretched that something like buy now, pay later has been the only way they've been able to either feed their family, put school uniforms on their kids, get them off to school, get them shoes, whatever. But this situation that we're in now, where people are over indebted and people are struggling, it's affecting many people in the workplace. And we see it every day where we have members come in and they're just... Their mental well-being is shot to pieces because all they can think about is the debt. And, if I mentioned earlier about we will lend from £50, I will tell you where the £50 loan came from. We had a member who came in just at the beginning of the cost of living crisis and said, I need £50. And we're like, they didn't have enough in their savings to give it to them. Yeah. And it's like, well, what is it for? I just need to go and buy a week's shopping. They didn't have enough money to go and buy shopping for a week for their family. So that's where our £50 loan came from. We realised for some people, they just don't have the ability to go and buy the week's shopping. They don't have the ability to go and buy the shoes to send the kid to school. They don't have the ability to buy a smart meter card. So you can't just say, well, I'm really sorry, but that loan's not viable for us. It's like, this is our member here who needs help. But where I'm going with this, sorry, very long-windedly, where I'm going with this is, people's relationship with money has changed. More people now are struggling financially. Yep. People in employment who are struggling financially are bringing their worry to work every day. Yep. And there's been a lot of research, and we see it all the time. And it's one of the major reasons that as a credit union, we want to work with employers to allow employees to save through their payroll is because we know the importance of building financial resilience. And whether that's saving just from £1 a week or £50 a week or whatever, building that nest egg is building towards a financial future is the first thing. But it also, by becoming a member of the credit union and by saving through your payroll, what the research has proven is the people who save through their payroll save more and save more regularly. So they build financial resilience quicker.
Yep.
But by saving and having access to the credit union and then having access to the other products, what we can do is, if you are struggling financially, if you are over indebted, we can do things like offer a consolidation loan so that you only have one payment and we stretch it out over a longer period of time. So we have a lot of tools in our toolbox. We can signpost to other organizations. My credit union, all of our frontline staff are qualified money guiders. So they've gone through a qualification to be able to help people. And if we can't provide the service and the product in the credit union, we know where to signpost them to.
Fantastic, okay.
But where I'm getting to is when I go to an employer and I say to an employer, do you want to invest in the biggest asset that you have?
Exactly.
Which is your staff. Tick. Yes, of course I do.
Course,
why wouldn't you? Do you want to improve your bottom line? And that's where they look at you quite quizzically. It has been proven that employees who are bringing debt worries to work are less productive. That's been proven.
Absolutely.
So by supporting the credit union to support your biggest asset, which is your employees, and allow us to try to ensure that the one thing that your employees are not doing is worrying because of debt, because we're supporting them, your productivity improves. It's as simple as that.
And you change the dynamics.
Completely.
You change the dynamics. So there's a couple of things, I think people often, maybe they don't really think about it as much as they should, but that feeling of self-worth and self-esteem, regardless of where that is on the scale, to have that is incredibly powerful, no matter how small, because then you've got something to build on. And I think the point around just saving something is the first important point, but the second important point, as you say, taking it at the point where you don't see it. Is
so much easier.
Oh, so much easier to do. Do you see the inequality gap continuing to grow, or do you see it kind of leveling out now? Because we've definitely got an issue with inequality generally.
Yeah, no, it's growing. It's absolutely growing, and the rich are getting richer and the poor are getting poorer, and that's a fact. And that is an absolute fact. We in credit unions. We do this exercise in my credit union, and we look at the world as a village. And we look at the world as 100 people. You can find this on the internet. Okay. It's a really powerful little video. And we take the 7 billion people and we shrink them down to 100. And that's our village. That's our tribe. And 6% of our village, 6 people out of our 100 will own 80% of the wealth of the village, and that's replicated, and that's growing. So my point is, the rich are getting richer and the poor are getting poorer, and that's a trend that we need to reverse. That is absolutely a trend that we need to reverse.
You don't know when your own personal circumstances, though, anyone's personal circumstances are going to change. I think we lead a life that people often say we spend most of our time either looking backwards or forwards, but not living in the present. But equally, I would say that you don't anticipate those challenges in the road up ahead, or perhaps as well as we could do. So circumstances of health, circumstances of employment, things that we're not in control of, that happens, I think, more regularly than people would think. And that
Absolutely.
has a big knock-on impact from a financial perspective, right?
Yeah, and let me give you an example. So we've talked about buy now, pay later, but you remember a couple of years ago we had the big phenomena, which was payday lending.
Yes.
So this has come back a few years ago, but we had a member, well, actually, let me take a step back. I was sitting in my office in the credit union, and one of my member services officers came in, and she said to me, she was an older lady and she'd come from a banking background, but she just got the credit union. And she came into my office and she said, I just want to make you aware that I'm just about to underwrite a loan that flies in the face of all of our policies, but I'm doing it. And I'm like, okay, Janice. She said, but if you want to understand why I'm underwriting this loan, then just walk past the member office. So we had this member's office at the front of the building. She says, just have a wander past. Okay. So I thought, okay, so Janice leaves my office. She's away to underwrite this loan that is in breach of every policy in my credit union. And I walked past, and then I went back to my office, and I could just see and no more the bandages on the wrist of the member who was sitting. I'm sorry, this gets me really emotional.
Yeah.
And that was one of our members, and she had so many payday loans. She was a social worker, and her husband was in a good job, but she'd been off sick for a period of time, got the first payday loan, got a second one to pay the first one, got a third one to pay the second one, and so on and so on and so forth. And she ended up with about 12 payday loans, and her whole salary was going to payday lenders, and she didn't see any other way out, and she cut her wrists, ends up in hospital. And her husband, they were both members of the credit union, which is the saddest part for me, but her husband brought her into the credit union and said, look, what can we do to help? So what my staff member, Janice, had recognized is we had the ability to take all of those loans and wrap them up into one low-cost, low-interest loan over a longer period of time that would get this member back on her feet. It got worse, though, not for the member. We got the member where she needed to be. So we took all the letters and all the emails, and we phoned every one of the payday lenders and said, they were all in Edinburgh High Street.
Okay.
We said, we're coming to pay off this loan. And they were like, we don't want it paid off, because that's not in their interests. Right. There's no, the minute you pay off the loan, then that's the gravy train for them stopped.
Yep, gone.
And I had another member of staff, Jim, and he said, right, just write the checks. He got in his car and he went to each of them and asked for the manager and said, you either take this or you get nothing. But here's the final payment. So threw the policies out the window. Member of staff gets in their car, drives around every payday loan to get that member where they needed to be. She is still a member of the credit union today and one of our biggest ambassadors. But that's how bad it can get for people.
Absolutely.
That's how bad it can get.
Yeah.
And it's this complex relationship, but also as a society, we've created this ease of access, which isn't helping people.
It must be really difficult to juggle the empathy and the humanity of it versus managing risk, right, as well. So it must be very difficult for you. Take my hat off to you, but it sounds like a phenomenal thing to have done. I wanna end the podcast with some positivity and something for somebody out there that might be in similar circumstances or have something that they've heard that really resonates. So if we can think about, ending on some advice, some generic advice that you've seen have a powerful impact on circumstances, on people, on families, that would be amazing.
Yeah. I mean, what I would say to all of your listeners, if you're not a member of a credit union, go and find out where your local credit union is today. 34 credit unions in Glasgow, so there's no excuse in Glasgow, none whatsoever. And actually, we're very lucky in Scotland because the whole of Scotland has access to a credit union. That isn't the same in Wales, Northern Ireland and England. A lot of great credit unions and a lot of coverage, but we're very lucky here in Scotland. There isn't one person living in Scotland that doesn't have access to a credit union. Right. So I would encourage everyone, go and find a credit union, join it, put your pound in every week. And, even if you don't need to borrow from that credit union, if you're in that fortunate position, then your pound a week is going to help someone else. You're going to help that credit union help someone else in that community. And what's not to like? You're the owner of the organization. When I tell people I own a bank, I own a community bank. Okay, it's my little credit union, but I do own a bank. There's so many good reasons to join a credit union. And, almost all credit unions, because we're not for profit, we have really great rates. Yeah. I mean, last year we had one of the best mortgage products in Scotland from a rate perspective. Same with the car loan. Scott West Credit Union here in Glasgow has amazing car loan rates. So, go and look. Even if you're just savvy and you just want the best deal in town, go and have a look at the credit union first, because they're there for whole communities. They're there for individuals. They're there for the community. They're there for the mutual benefit of everyone involved. And, you know, it's like, what's not to like?
And that's the difference, right?
That's the big difference.
And from an employer perspective?
Employers, if you want to improve your bottom line, if that's your motivation, get involved with a credit union.
Yeah.
If you want to support your greatest asset, which is your people, get involved with a credit union. And if you just want to do the right thing, sign up and partner with a credit union.
You've got me, Marlene. Thank you very much for coming along. I'm sure a lot of that is going to resonate, and hopefully people will take heed and your advice. So thank you very much. I still can't get over the 35 years. Fantastic. Thanks for coming along.